Okay, well, once again, welcome to our webinar on exploring likely future strength of a group of currencies or an individual currency or any major asset classes. And just before we start, if you won't mind, but let me just give you a little bit of my background. I'm a 56-year-old. I have been working in the financial services in UK since 1990. From 1992, I qualified as financial planner or financial advisor, and I had been working as a financial advisor regulated by the UK Financial Services Authority right up till 2008. And from 2004, I had to reduce that work to part-time to care for both my aging parents, and they required greater degree of daily nursing care at home, and I cared for them until recently, until they passed away. So now, for the last 12 to 18 months, I have been looking at ways of either going back to my work that I'm qualified to do, or to take up my real passion, that is to trade. As far as the chart analysis go, so from that you will gather that I have quite a reasonable understanding of how many of these asset classes work. And then in terms of the charting, my introduction to the charts were from about 1992-93 onward. As I began to advise many of the clients, I had to look at the charts and I had to try and figure out what, if any, message I could get from it. And like in the early days, like everybody, you think you understood everything, and then you find that there is a lot more to learn. So progressively, I took many courses. I've read a lot, attended many webinars, and basically, gathered material and knowledge over many years. And one of the main class that I have been trying to focus on also is incorporating Elliott wave. Now, many individuals may not appreciate it, or many things that you can't look at a chart to plan what likely future direction the particular instrument might take. Now, to some extent, I understand there is no 100% way of really predicting anything, but nevertheless, for many of us who are not able to or don't have the resources to go deep into analyzing financial fundamental details, the chart analysis is the next best thing, I believe. And I think it is in fact the most important thing even for the fundamental analyst, because many times I have noticed that the fundamental factors take many months, sometimes even a years, to actually play out, and the chart analysis enables you to get some kind of a timing right. So hopefully what I'm going to share with you is going to be very useful, and in particular I'm going to share with you, there is a lot to actually share, but I will reserve some of them for future occasions. But in particular, as I've explained, we will look at ways I approach the market, specifically in getting a bias in a general direction, not necessarily time every 5 and 10 minute chart, but to get general bias of a longer term direction, and then also try and analyze which of the currencies are likely to be stronger going forward, and which group or an individual currency is likely to be weaker, or a particular asset class. And with that, I also want to just qualify that when you are looking at strength and weaknesses of a particular asset, many websites offer some graphing historical statistics. So for example, you might go into a website and say, for the last week, a particular currency rose up by 1% or 2%. And maybe over a month, you might be able to see that a particular asset class performed better than the other. Now, these are good, and in a shorter term, they could help you. But I feel that they are like many other indicators looking at past data. So sometimes if the data that they show on the screen continues to play out, then they're good. But if they're toward the end of their particular cycle, then often they could be useless. So in addition to that, I think we need to approach them in the way that I'm going to show you here. So let me start first of all, just to give you some very broad very broad description of how I have approached, certainly in the last 6 months or so, to try and get a bias of many of the major asset classes. As I say, I've been charting for some time, but particularly in September, after the Ben Bernanke's minutes, when or his speech in September, when the euro peaked just after that, there were things in there that caused me to consider my future bias after that particular meeting. So what I then did was I went back and I looked at this particular screen, and some of you who know me from the past will know that I've shared this material with you previously. This one, and you can go onto this particular website. This is US inflation calculator, and what I did was I simply said, 1913 to 1912, approximately 100 years. So what are they saying about the inflation factor in US? And it appears as though that whatever we had back in 1913 would only be worth approximately like 95-96%. So when you see that the dollar, if there was dollar index available, then we would be looking at very low level. We'll be looking at dollar have fallen in value to probably about 92, 93, 95%. So that's a very big drop over a longer period. So how do I analyze chart? Now the dollar index actually I don't think was available for checking much beyond this particular chart here. This chart here, and this one, sorry, this one is only going to 91. Let me just come up with the other chart I had here. Okay, so this particular chart only starts from 1973, but you can see on here what I think is that whatever it was coming down from this top left hand corner must have been a very big massive wave to come to wave 3. And another reason for that is if you look at the RSI, although we don't have a data there, RSI was quite low on a monthly chart. So that must have been part of wave 3. That's my logic behind it. Then we've had this wave 4, which is the sharp and often a kind of retracement you expect in a wave 4 sometimes. Sometimes wave 4 is very tedious and very overlapping and very long drawn out event. But here we have possibly A, B and C kind of a thing, or in some way this is the wave 4. And then we have now started in a major wave 5 down, and in a major wave 5 down I think this one looks like it's a wave 1, 2, 3, 4 and 5, and in that it may turn up to be like an ending diagonal. Okay, so that's my first cast on getting to grips with overall longer term trend. Then I did analysis on the dollar index in a little bit more detail, looking at that last piece here. So in this last piece we had this major wave 5, we've got 1 here, 2 here, and then we are seeing this. So this is the kind of pattern you would expect to see in the area of wave 4 on this last one. So this is a wave 5. Within the wave 5 we are in a wave 4. So we are toward the very end of this. And out of these possible combinations, I think the one that I think is fitting the description is this one here. This one is called a running flat. So in other words, where you have like a flat correction as A, B, C, and it's horizontal, or an expanding sometimes like this one called irregular flat. This one is a running flat. So this appears to me is the best match pattern for this one, and it is actually going in the direction of the main trend. So it is correcting. So wave 3, wave 4 is correcting, but it's correcting in the direction of the trend. So we have wave A here, wave B here, and wave C there, but you see that it is slanting toward the bottom. So when you have such a strong trend, sometimes these kind of waves do not correct in a normal way. They correct in the direction of the trend. So I'm labeling that as running flat. So since the mid-September, this particular chart was prepared, and my bias has been to the downside. And whilst I'm prepared to accept that maybe we might come up to this kind of a minor trend line rising and possibly go back up and then fall, or just continue straight down. My preference would be that we continue straight down, because the other one is too painful to think, simply because that would mean the dollar index would go down even further. But if you draw this trend line and it's connecting the low, significant low here and this significant low, we may expect dollar index to bottom out in that area. That could be around 68. Okay, but if we find that this dollar index comes to this minor red line, go back up and then drop even further, then we are dropping at much lower level. So either is possible. Either it comes to this level, jump back up and then come down, or simply just continue cascading down. And currently I am leaning toward this one, just continuing straight down, and probably hit this area around about 69 to 68 area. So that's my bias on a dollar index. Now dollar index actually governs a lot of markets. So let me drop that one down. And dollar index, I suggested that it continues straight down. So in terms of time level, this is a US Dow Jones monthly chart, and again this one I produced in September. You'll see here the date, 16th of September, and this is my understanding of what Dow Jones is doing. And whenever Dow Jones is going up, in general, on a big picture frame, the dollar index will be going down. So I think that if the dollar index continues straight down to hit about 68 or 69 on the Dow Jones, we would simply continue to grind higher. And I think we are in a very large megaphone pattern. And my analysis here indicates that if we, for example, look at this time frame, then this high in 2000 to the low here in 2003 took about 33 months. And then the next leg up was approximately 60 months. So I'm saying to myself, and here was 17 months, so that's approximately half of this. So I'm saying to myself, supposing we have a 60-month cycle again from the low to the high. So that's projecting toward the back end of this year and early next year. Okay, that could be like first quarter of next year. Then within this last cycle, I measured this one as 28 months. And in fact, if I was to measure, this is 28 months. So if I was to put 28 months from here, I might find that we've got halfway cycle here at the top, and we are looking to go up. So this also gives me the impression within this last bit here from the low of 2009 is that we are about approximately 2/3 of the way through. We've got another third of the way through to go. So I think my thesis on this is that the dollar index will continue declining for the rest of the year, and will probably hit bottom back end of this year, probably early next year, maybe even middle of the next year. And once that completes, then by then the Dow Jones and many of the other equity indexes will be at the top. Many of the other asset classes, such as oil and some of the other commodity markets, they will be also hitting their all-time highs or retesting their previous all-time highs. And then in terms of coming down, this calculation I've done is based on the detail provided on the website that talks about the pattern. I will share that with you another time, but we will look to come back at least to retest this 2009 low, and that would be a 60% drop. And they say that if a 60% drop when it breaks below, then you'll have a 60% drop below. That means we are going to be then looking for major like 3,000 on Dow Jones. But for the time being, my bias is to the upside. And just another observation is that the first year in US presidency never really experiences major tops. So second year of US presidency starts next year, and that also comes into the view. And one final point is, if you go back historically, you will find that like 1973, 1983, and some of these major topping of the market came in year 3 or year 4. So those kind of observations tells me that we are basically heading up for this, and therefore our dollar index should be going straight down. Now if it behaved in that particular fashion, then it would be a textbook classic analysis, whereby we would expect toward the end of this year or early next year everything changes. The dollar will then make a major historical low and will be then in decade-long uptrend, and the equity market and many of the other asset classes will be in a general downtrend. So that's my canvas in approaching analyzing the major trends of the currency market. So let me now go into the specifics. More recently, just this is for a very short-term view. More recently, this is the VIX index chart, and is live updated until yesterday. That too is hitting or progressing toward working towards 2007 low, and I think that's going to be the case. It's going to be making small higher lower highs and lower lows, and basically cascade down, and probably hit this 2007 low, which on my chart is probably the last low, the major low we've had. So I'm not expecting this VIX index to jump marginal or substantially. So any correction we get in equity market will be moderate and not a major sell-off. And let me now go into the currency pairs we are looking at. So I don't know whether any of you have a particular group of currency that you wish to consider, but let me say, for example, approach euro. So what I do is, on my chart here I have major euro groups pair. So on this particular one I've taken up euro pound, euro cad, euro yen, euro Swissy. Now euro Swissy until recently I basically ignored completely because there was not really much to analyze. So then euro New Zealand and euro Aussie. Okay, now in the euro pound, and this is one of the image you saw, and again it's an image that I produced back in September, you can see here. So when this was produced on 18th of September 2012, and I will share with you the real live chart. So this high we had here back in 95 on a euro pound, I think was the large capital wave A. Well, this is my way of labeling, other individuals might label it differently, but that was a major leg up, so I'm calling it capital A. Then ABC down as a capital B, and then we are now working on a 5 wave up to make a capital C, and in that I think this is the small wave 1, 2, 3. This was ABC down to wave 4, and we are working on wave 5. So with that understanding back in September, let me show you the actual chart now. This is the euro pound, and some of you have seen my chart on this one. So just going back, this was a wave 4, a major wave 4, and right at that time I anticipated that we will be working in a 5 wave move to the upside. It will be an impulsive wave move, and in that we've got a basic first wave here which formed the test of the neckline. We pulled back for a wave 2, and again wave 2 is running flat. So in other words, running flat meaning it is correcting, but it's correcting in the direction of the trend. And the way that is happening is that we had a smaller degree 1, 2, 3, 4 and 5 waves to give you a larger degree 1, and the larger degree 2 is here. You would expect it there, but it's here because this was wave A, ABC, and another wave back, so it's wave 2. So based on that understanding, I was expecting a third wave, which is a very strong and very powerful, and I don't think it's over yet. Once this third wave is notorious for extending. So in other words, what I've got here, where I'm thinking to myself that on a smaller degree, I have 1, 2, 3, 4, and 5. So that completes a minor wave 3, maybe another 4 and 5. But maybe when we finish, we might finish up with that as being the wave 1 of a larger degree wave 3, because eventually we are heading towards retesting this high, or even taking that out higher high. And so this pattern is quite clear. So based on this pattern, and based on the understanding that the euro is in a big uptrend, because if the dollar is in a major downtrend, then the dollar index consists of 58% weighting of a euro, and maybe another 10 or 12% of Swissy, and similar of pound. So basically between pound, Swissy and euro, the bulk of the index is made up of that. So if the dollar index continue down from an all-time low, then most likely a euro against the dollar will probably do an all-time high or retest of the high. But in this process, the euro pound chart is much clearer in the actual wave analysis. So I am expecting that. So currently we are at a pivotal level, but we are currently in a wave 3, and I do not expect that the euro is going to really slow down here. It is going to speed up paces, and if you look at a weekly chart, you see that here in between, once it clears this, there's no real structural resistance until it gets to 90 or this higher level here. And so we would expect that speeding up process, and that speeding up process is currently seen on this daily chart, on the steep, sharp, rising trend channel, and it's very narrowly defined trend channel also. So that's what I'm expecting on euro pound, is that it is in a long uptrend, and therefore the only thing you could do with this one is wait for some reasonable retracement that lasts for a week or so maybe, and then try and get long on it. That's the only direction I would expect to play on this, and not necessarily try and short against the trend. Now if the euro is so strong against the pound, then I also now look at euro CAD, and euro CAD you can see long term where it has come from. It's come from all the way here. I don't have a historical data back here, but you can imagine this was even higher. So it's come from all the way, it's dropped down here, and it's made a major low. And I incorporate in my analysis, before I start putting the Elliott wave in, technical analysis just tells you that first drop down here was very strong, then we had a retracement, and this next drop was not powerful as much as this one. So we've got potentially a major RSI divergence. So that suggests to me that we should be looking for a bottom. And then in addition to applying trend lines on the actual chart, I also applied trend lines on the RSI. You can see where it broke. So that was my indication that this area was looking for potential bottom. So then I look at my Elliott wave. Elliott wave tells me that this was a large wave A down, this congestion as a wave B, and we've gone into a wave C, and therefore that bottom was formed, and I anticipated this bottom. And basically you might need a confirmation, but I've been looking for basically a long trade on euro CAD, and so so far the conclusion I'm beginning to draw is that euro is in a major uptrend against a pound, and euro is in a major uptrend against Canadian dollar. Canadian dollar is a resource currency, so if the euro is in a major uptrend against a resource currency like Canada, which is oil and some other resource, then I would expect euro relative strength against other resource currencies like Aussie and New Zealand. So that's a kind of picture I'm beginning to build. Okay, so in this particular case, if anybody wants to consider maybe looking at entering this, then just like the euro pound, it is producing some kind of a head and shoulder pattern here, a small shoulder, right hand, a big head, and a small, sorry, left hand shoulder. I keep doing this every time. This is a left hand shoulder, a head, and a right hand shoulder. And ignoring that, we have potential. What we look at here, it rose very sharply. It had a cup and a handle formation, and it broke out. So this was the wave A, and in fact I will dismiss this now. So this was wave one, a flat running wave 2, and we are in a strong uptrend of wave 3. So there is no limit to how far euro CAD would go, and simply trade this to the long side. I look at a major resistance, nothing in between. Major resistance is 140-360 area. Once it clears 160-430 area, then you got this sort of level here, 159 and that. So really speaking, trading a small position on just end of day basis and only looking to trade long. Okay, and in all of this, my suggestion would be is that when you get a decent pullback, when you think pullback has lasted maybe at least a week, then that kind of pullback is an entry. Once you enter with a small position. This is the way I manage my money. You enter with small position, a small position gets into profit, say about 100 or so pips, so you bring it to break even and lock in a little bit profit. That's the first thing you do. After that, you can be a bit more generous, because some of this retracement you'll notice that is like nearly 300 pip, so you have to remain some distance away. So after that, I would allow a greater luck. I will stay, well behind the price, and then whenever it does a substantial retracement, then at that level I will bring my stop loss to below the low provided and add another lot. And that way you could, as you get staircasing up, you could get a reasonable size position by the time this euro begins to hit this sort of level. Once it's broken above that, you might have, even on a small account with no extra risk, you might be, maybe about half a lot or even one lot built up, and then simply just ride. Because I have a feeling that just like the euro is looking to retest the pound all-time high, I think that this euro is going to take up this high, Canada's high. The next chart we're looking at is Euro New Zealand, because the New Zealand is a resource currency as well. So what is that doing? Look at the way it's fallen, and I look at this and think to myself that this is like a very strong tensile a wooden branch, and if somebody is trying to bend it like a bow, you can imagine the amount of stress or the potential latent energy that's held in that, and it's going to break out. And then this last leg down in a classical technical analysis is like a falling wedge pattern. So falling wedge is, in Elliott wave terms, appearing after a drop like this one is an ending pattern. That means that's the end of this major move. So if it is an end of the major move, you would expect at least a 50% retracement, if nothing more. So 50% retracement, I don't know where it would come, but just let me check. 50% retracement, for example, is coming to something like this sort of level. But I think if it clears this one, which is probably more significant retracement, because previously on here you can see there was a resistance, became support, then became resistance. So that would be my really next target for euro. All these are going to be intermediate resistance, but they're not going to be significant to actually change the trend. This is the major one at 159, 195 area somewhere. But more significantly, I think that once it clears that, then it's going to go like this one to the top. It'll blow up. So for the time being, I'm expecting this as my real major first target. All these in between are going to be small staircasing up on the way up, like it did on the way down. Okay, and we are in a very early stage here. Look, we are right at the bottom, and right at the bottom, I'm looking at it. This was the bottom here. So in my way of analyzing, this was wave 1. Then all of this side wave was a part of a wave 2, and we have just started on a wave 3, and we're in early stage of wave 3. So if we try and get long anyway here, you would look the next target to be this one, which is at 169 or 170 area. But that, as I say, is going to be minor, because once this is taken out, the next one is here, the 180 and 195. So most likely I would suggest that this euro against New Zealand is on a big uptrend. Now obviously there will be setback along the way, so you do have to remember that. But I think, if you really want to trade long term using small positions and clocking on, even on a 1 mini lot, I mean, just imagine if you do a rough calculation, 1 mini lot, and if this one does anything like what I'm suggesting, anything like coming to here, so from here to where the price is nearly over 3,000 pips. And as a rough layman's calculation, if 1 pip equals to $1, I know it doesn't, because you're dealing with euro and New Zealand, so it's a little bit different calculation. But if you just assume, for an argument's sake, each pip is a dollar, then we are looking for nearly $3,000 by the time it gets there, if you get in now, and simply just buy a position and forget. And if you really go in with that and say your stop, buy the position now blindly, just buy the now and put your stop here. So you are currently risking approximately 800 pip, but on the way up you are looking for nearly 3,000 minimum. But in real analysis, it could be going a lot higher. So this is the kind of thing I'm beginning to see currency at the moment in a major new trend that will last for several months, and nothing is likely to change that immediately. They can have a setback, and some setback could be quite strong, like this one here. That was nearly 700 pip. So I do expect those kind of setback, but as a position trader, those kind of things should not affect you, because your stop will be here. You will not move that stop. The first thing you've done is a lock-in profit and guaranteed, a little bit of profit. After that, there's no risk. So then you leave your stop well behind until you get a significant retracement like this and a new noticeable higher low, and it begins to go up. Then you move your stop to that and you leave it there. Then if this goes up 1,000 pip and comes back by 500, you worry not. Then you provide a next step and you bring it up. So the Euro New Zealand is on the uptrend. So that confirms our analysis that the resource currencies relative to euro are going to be weaker. Okay, so one final resource currency is Aussie dollar. Aussie dollar is almost identical to the one we just looked at in the Euro New Zealand, and that too is in a very early stage of breaking out to the upside. This major downtrend is over, and if you look at it, and this is the chart that I've published on the TradeView, you'll notice that this to me is a classic cup and a handle, and it's almost a double cup and a handle, because on a daily chart you got a larger cup, larger handle. If you go into the 4-hour chart, you've got a secondary, you got here a secondary cup and secondary handle, and we've broken out. So this too is in a major uptrend, and really if you look at it on a weekly chart, on a monthly chart, it came from well above there on the left, came here, retrace, and then dropped again. So I would suspect that if we do this one again in the same sort of way, 50% retracement is around here. Previous historical support could become resistance. So anywhere around up to 163, but I think it's going to continue higher. But 163, even that, for me is excellent job, nearly 3.5 to 4,000 pips. So resource currencies are going to be weaker. On this first glance we are looking at, we conclude that the euro is going to remain relatively strong, and everybody knows about yen. Yen is in a major weakness period, and this euro yen is going to be looking at this here. 169 to 170 is a euro yen target. Anything in between are only minor obstacles. So yen is in a major decline, and we'll come to that in a moment. But yen is in a major decline, but the resource currencies relative to euro are going to be weaker longer term. Okay, so that's a first conclusion. So euro is relatively strong, and my perception is that the euro is going to be the strongest currency around for the next 12 months. Okay, let me go now to say pound. How will the pound fare in all of this? So this is same thing. You've got a pound Aussie, euro pound. Well, we've looked at the euro pound, so we know what it's doing. Euro Swissy, pound CAD, pound New Zealand, pound Aussie. So we'll start with a pound dollar. Okay, now in a pound dollar, many of them have written this pound dollar out. Again in September, I formed a view which many are thinking that this big drop was a major drop, and that we have finished retracing, and this is the symmetrical triangle, which I don't deny it's a symmetrical triangle, and it is possible for this symmetrical triangle to break down, which is what everybody is reckoning is going to come down here. But I don't think that's going to be the case. I held that view up till September, and I am not foolhardy, so I'm not going to completely dismiss it, but I have charts to show which this is my analysis. I think that this was a big drop down, and we are currently retracing some of that. So we have already done a wave A, a big one wave A, and a big one wave B, and since then, ignore all of this here, since then we are on a new leg up, and in that new leg up we've done wave A, we've done wave B, we are doing a wave C, and we've done initial A. So if you ignore this is going to be over here, initial A here. All of this is the part of wave B, and we are going to be rocking up. So I would not be surprised if a pound dollar gets to somewhere about 180, or maybe even higher to about like 196. And you can imagine how many people at the moment are wondering which way pound is going to break. If it breaks to the bottom, it's going to be a very powerful move. If it breaks to the upside, it's going to be a very powerful move. And I did have a chart which I can't quite put my hand on for the time being, but you can see here on this chart, this area I think is a minimum target, because that area has been a pivotal place. It has often been a resistance and support historically. So over here we had a resistance, a support, resistance. So we are looking to work out of that, and if it breaks above that, then I think the pound can actually get to the top end over here. Okay, so my general feeling is what I've just explained, is that we are currently still in an uptrend, and looking at in a shorter term, this was the low. So in other words, if I just say we're in an uptrend, so we've done here in this big cycle wave A, this one was a minor A, then we had A, B, C, D, E, I believe, okay, or just simply A, B, C. So where I'm going to put my line, this low here is the low, so I'm going to put a wave B on that. And with some of these, I'm not dogmatic, I just want concept. So even if you don't know Elliott wave, I suggest you just simply look at the basic concept. Okay, so we had the first leg up, and then we had 2 step back. So 1 step back here, 1, 2, 1, 2, 3. So it's A, B, C. So 2 step back. Then we are working on the next one. So at the first wave A, this one in fact is not A. This one is a wave B. And now we are working on the next leg up. So if we drop down to daily chart, then see this here where I said is a low. I think that is a significant low. And we've made a first attempt to go up higher. So whatever you call it, either you call it a like a dry one, then we had an expanding flat. An expanding flat in Elliott wave says that we should expect like a complex zigzag here. So we got complex zigzag ABC, ABC back up. Okay, so complex zigzag wave A, complex zigzag wave B, then wave C will have 5 waves. Okay, so if it's going to have 5 waves, where are we in process of doing that? So I think you look at it here, it looks like just basically eyeballing it. You got wave 1, wave 2, wave 3. This is probably wave 4. We're going to get another test, and that will be the low for pound. So if we get a retest of this one or minor lower low, you will see on this daily chart we will get divergence on the RSI. RSI on the next price drive down, RSI will come but won't be able to keep up with the price, and so when the low is formed, we will get divergence forming. So if that forms, then I will be looking, if you want to trade pound dollar, I will be looking for a retest of this low or slightly lower low, and I'll be looking to go long. So going back, if the pound is going to be rising like that, that means that is fair to say US dollar is going to be weak. But we've already concluded previously on our first big picture analysis of dollar index that it is in a long-term decline. So on that basis, we would expect pound against the dollar to gain. So I would be looking for a low here, and we'll quickly move to the other pairs. But if this scenario holds, then on the next drive down where a pound actually forms a bottom, there will be significant opportunities in trading pound against other currency pairs, with exception of Swissy and Euro. Okay, so such things like pound Canada, pound New Zealand, pound Aussie, because we concluded against the Euro that the resource currencies are going to be weak, and I feel we will probably find same thing with a pound against the resource currencies. Pound is going to be relatively strong. So this is my second picture I'm building up for the pound. So we've looked at Euro, pound, so we don't need to go into that one. Pound Swissy. Pound Swissy is somewhat a strange thing, but that too has come down in this way. And in my way of labeling, I think this last bottom we saw, we are currently working, this is wave 2, wave 3, wave 4, and we are working to complete this wave 5. And in that wave 5, we've got a small 1, small 2, small 3, and the top we saw here was a small 4. We are working our way right to the bottom. But so far, it looks like we have already made a wave 1 down, wave 2, and we are working on a wave 3. And you can see within the wave 3, we've done 1, 2, and 3. So this is a part 3 of 3, and 3 of 3, what is a wave is so powerful in comparison to what's just passed by, that is almost like a rocket, or a lead, like a lead in the water, just plumbing straight down. Obviously it will come to some structural support where it might find some short-term support and bounce back, but longer term I'm expecting this pair also to come back here. So these are like big picture analysis. So against a Swissy, because Swissy is pegged to the euro, and that's why it will exhibit something similar to euro against a pound. So we're expecting a big decline on this one. Then the other currency we're looking at is pound CAD. Pound CAD, on my data you can see on this weekly chart where it's come from all the way there, and I think that this low was a significant low, and from there we have risen. You can see on the weekly chart, small 1, small 2, small 3, small 4, and small 5. So I think that's completed larger picture 1, wave 1. All of this mess is a part of wave 2, and again I think that this particular low here is a significant low. So the wave 1, wave 2, if that's correct, then we are beginning to now start winding up and gathering momentum to the upside. So if we simply look at this, if this was the high, I don't know that it is because I don't have the data there, but if this was the high, then 50% retracement is somewhere around 178, 179. But if you look at it the structural wise, we may be looking for 161 or maybe 170, 78%. So this too has a massive potential, and that means that the Canadian are going to be quite weak compared with the pound, as well as against the euro. So if you look at this on a shorter term, it's a very messy chart, and I wouldn't really want to trade it. But it's a beastly chart, so when it gets going, it really gets going. In a day, it can easily do 120 pips or more. So I am looking at this one now. When the pound bottoms where I indicated against the dollar, I think that the pound Canada is going to bottom. It already has formed a bottom, or will be forming a bottom a little bit lower down. Maybe in the area of 157 to possibly 156.50 area or 156. I will be looking to go long where I've marked here. Okay, and then it will be very similar to cup and handle kind of a formation we looked at the others. This one won't exactly have cup and handle, but it will show a slightly different. Let me see if I can show you on. Sorry, we'll have to stay on a daily chart. Okay, you can see here that we're going to be now, if that was a lower high, higher low, then now we've done first step. We've come back on a deep retracement, and then we'll be starting up on a wave 3. Now, if you know anything about wave 3 from what I've just explained, it's a wonder of wonders. On a wave 3, you're constantly wondering where is it going to end, where is it going to end, where is it going to end, and often you do not find a top. And see this kind of a drop. This is a signature of a wave 3. So we could get something like that on the other side. You can imagine masses of people, institution in this area not knowing which way is going to go. Once it break above, everybody will know which way is going, and you can imagine the momentum that will carry. So I am very excited. I think we are in a very early stage of many of these massive trends that are shaping place for the next 12 months, an opportunity to really benefit and make money. So Canada is going to be weak against a pound. New Zealand, very, very similar picture. Not much data here, but very, very same kind of a picture. Formed a major bottom and is also trying to work into a next leg up. And just very briefly, the low that we see here is the low. So that low was back in July 11. That was the first low. And subsequently, we are trying to wind a clock up like 1 2 1 2 1 2 and trying to get going. So this first one is my understanding is a very big degree wave 1 or an A. Then we had possibly a retracement wave A, B, and C. So we come back into the area, very deep retracement, almost 100%. Not quite 100%, but almost there. So we will be looking for when the pound bottoms against the dollar, where I just showed on that previous chart. I am looking for something similar to happen here. It is in an area where we should get a bottom, right? Where I'm expecting a bottom to form in this area here to actually go long. We are so close. We've done almost like 90% retracement of that first leg up, and you can see this minor downtrend channel on the 4-hour chart. If that breaks with the upside, you know that you're in a very early stage of that major leg 3 up. And the major leg 3 up, the first target is this one here, 197 to probably 2. Okay, so instead of dollar Canada, pound Canada, this chart is much kinder to the eye, and I would suspect that you could trade this one. And first target is about 1,000 pips away from current area, and in fact at the moment is a very low risk entry, because at the worst you can use this low here. See this significant low here. So from the current price, we're about 400-500 pips away. Okay, that would be your ultimate stop, although I wouldn't allow it to go that far, but it's ultimate stop. But again, because we have the time on our side, we don't need to be so desperate to enter right away. We need to see a break of this minor trend, and we need to see higher lows rather produced on the RSI on daily chart, because I'm expecting divergence here. Now you can see when the price comes and makes another low here, it will form a divergence on the daily chart. That will be my signal to consider opportunity for going long. And then on a 4-hour chart, you will see this trend line retested. Sometimes I find on the price it's difficult to put a trend line on, but on RSI I use this all the time. On RSI you will see it come back and retest the rising trend line, and basically that's what I'm looking for, a bottom to form. Then I will drop down to either a closer examination of a candlestick and enter on that basis. So we are in a very close area for entering long position with a relatively small risk. If we find that that's a bottom, then you enter with something like 100 pip stop loss, and your initial target is here, and that's about 250-270 pip. So by then you will have brought in your stop loss with break even, and then forget about it. Then let it just rise, because that's the next target here at 197. Along the way, when you see a retracement, then you add another position and bring your stop loss in. So massive trade for pound New Zealand. So again, if the pound was to rise that much against the New Zealand dollar, then that would suggest that the New Zealand dollar is going to be weak against the pound. And same picture again, this chart has come down, and you can see it's trying to find rounding of a bottom, and then once it formed the bottom, it's going to start rising, and it's going to start rising steeper and steeper and steeper, and this is going to get like that. Just like the ride you've had on the euro pound is an example of what we could expect here. The same sort of ride you had in euro yen. So euro yen was the first of the block on the race, and then the euro pound, and then subsequently all the other currency pairs are catching that. So pound Aussie is in that stage, and again this one has a similar kind of a picture. So you can see now that just looking at these pictures of big term analysis without doing tremendous detailed analysis, we are forming the view that the dollar is in a major decline, and we will reconfirm that. The euro is going to be the strongest currency around, and probably second one along with that will be Swissy, and the third it looks like going to be a pound. So those three will be the strong currency group, and the resource currencies which we've just established as the Canadian dollar, New Zealand dollar, and Aussie dollar are going to be relatively weak, and the yen will be the weakest, and the second weakest will be the dollar. Okay, so let me go to now the next one to go to is the US pair. So in the US pair, we've already done the examination sort of pound dollar, and we've also said about the euro USD. In fact, for a euro USD in September, when I produced this monthly chart that I showed you earlier, this is the live chart, but the other one I showed you with a screen capture. So this monthly chart I did in mid-September, I also produced a Euro monthly chart. So this is my Euro monthly chart, and some of you might have seen this chart. What I'm expecting Euro at least to go to something like 145, 146, which simply is a trend line connecting, this brown trend line connecting the high and this high. And really it's not a major trend line, but it could be possible. And the secondary test is that if I pick that trend line up and I put it here, just casually it seemed to pick up the major lows in this congestion. So for that reason, I am keeping my eye with that. So the Euro could do this going straight up, retracement down, and then going for a next leg up. Okay, in which case it will retest the high or make another marginal higher high, or it could fail there and collapse. But based on my analysis of the big picture dollar direction, my bias is to the upside. But as I said, there are two possible outcomes, and this is the chart that I prepared in September, and so far it is working out beautifully. Even the current ride, I don't think we will really have any significant pullback until we get to 146. You know, we'll get a small pullback, relatively speaking, because this is the monthly chart. If you go to weekly chart, you know, you can see that we've already had a pullback like that. We're going up there. I expect another small pullback to probably about 134, 133 area, and then it will form another leg higher. But I think this is going to really fool everybody. You know, everybody's expecting Euro to get bankrupt, but I think it's not. I think something else is at play. Dollar, for example, is one of them, and this would suggest that if it carried on up there, then at least for next few months, dollar is going to be weak. And I think I've also published a chart yesterday, you know, saying and giving reasons why I think dollar is in a you know, very vulnerable for a major breakdown from the current support level, and the Euro for that reason will be continuing to, you know, carry up with minor retracements along the way, but head much higher. And if these lines are any guide, we could be looking at probably end of March, early April. We could be sitting at somewhere around 146, 147 on Euro against the Euro against the dollar. So that was the Euro chart. Then if you look at US dollar Swissy, then this is the big decline that is forming, and I think we are currently on the last leg. So, you know, you can see all these things are now clicking up because we are expecting dollar to make a historical low sometime late this year, early next year. So I think by that time, against the Swissy, it will probably do the same. And currently we are looking for 5-wave move to the downside. And in that process, we have done significantly. We are currently, this mess here, I think, is a part of wave 4. And this sharp decline now is, I think, a next cycle down for wave 5. So we would soon be looking for this particular currency pair taking out this low at 85 area somewhere very soon. Other than that, it is looking very much like a dollar index with a head and shoulder pattern. So after a strong rise, it's produced a left shoulder, a head, right shoulder, and is in a process of breaking down. Once it breaks down this level, it will probably have this kind of drop on the other side. This one was instigated by a Swiss bank, of course, intervening. So we might not get exact replica, but I suggest we will get fairly strong movement to the downside, because everybody will be then clear that we have now broken the support and they know which way the trend is. So many stops taken and many new shorts encouraged. This one is a US dollar Canada. US dollar Canada is also, you can see, massive drop, retracement, and we are in the next ABC to the downside, and these two will produce a historical low. This low here we have is a major low on my chart. So if that was a major low back in 2007, then I think we'll be retesting that or making another minor lower low, and all within the space of next 12 months. And in that process, we've dropped here. We had some kind of a congestion. So either this is a part of a wave A, this congestion was a part of a wave B, and I think we are in early stage of a part of a wave C, and that wave C will then coordinate with the last leg in the dollar index we are looking for. So that would suggest that against the Canadian, US dollar is going to be weak. So that begins to confirm our picture that the US dollar is going to be weaker all round against most currency pairs with the exception of yen. And if you try and reconfirm that against the New Zealand dollar, this is my big chart of New Zealand dollar. And if you take my word for it, I don't have a picture here, but if you take my word for it, this particular chart was coming from very high to down, and my feeling is that this here is an ending diagonal. Whoa. So whatever that wave was, I think this is wave 3, this is wave 4, and this is wave 5 is an ending diagonal. Okay, so if it's an ending diagonal, this is what it should look like that. So wave 1, wave 2, wave 3, sorry, wave 1, wave 2, wave 3, wave 4, and wave 5 failing with a failed wave 6 and failed wave 5. So that finished in. So then we've now, whatever that major move was from the high, we are now done A, B, and C. And this wave A was A, B, C zigzag. So we expect the same in this one. And I think we've done a minor A, that's A, B, C zigzag minor A. So that produced a larger degree wave A. So this here is the first part. This big one was big capital A, big capital B, and going up here is the first leg up. This is the wave B congestion, which is typical for wave B or wave 4, and we are looking for higher. So New Zealand dollar, we are looking for higher prices to come, and for the time being, I think where I have drawn this line, I think we already have an important bottom, and we've formed the first leg up, and we are in a process of actually, finishing up the correction and going higher. So currently on this one, I think that we will be looking for a low around here. On the next retracement for the dollar, we would find this currency would probably come down here around about 82, or maybe a little bit lower down at 81.50, and then it's going to start heading higher. So if it does that, then where is it going to go to? So if you, for example, just do this like ABC, like this leg up is wave A, put it on here as AB equals CD, we are looking for like 94, 95, 0.95 area, and that would be a culminating top. And once that culminating top finishes, then whatever that big picture was here, we've done A, B, C retracement, and will be then dropping down. And again, that will happen by the end of this year, early next year, and then the dollar will have put a historical generation low, and for the next 10, 15, 20 year, dollar index will, broadly speaking, will be going up, and then all these currencies against the dollar will be weakening, including Euro, Pound, New Zealand, Aussie, everything. So this suggests that whilst these currencies are appreciating against the dollar, we are really continuing to we are just continuing to find that the dollar is going to be weakening and other currencies are going to be gaining against the dollar. So finally here we have Aussie dollar, the same picture. Aussie dollar I'm looking at is a possible low around 1.22, 1.022 area maybe, before it begins to go higher. We already have an important bottom in the same sort of manner as a New Zealand dollar. And then against the US dollar yen on a monthly chart or weekly chart, you can see how it's come from very high, and this again is the ending pattern. This is very similar sort of pattern we saw on Euro CAD and Euro New Zealand, etc., and is now retracing back up. So the thing is, what is it retracing? It's not retracing this last leg, because this last leg was the last piece of this downtrend. So wherever that downtrend started, so say for example that downtrend started here, okay, so my view is that it would be retracing all of this move here, and therefore how much does it retrace generally? So say for example it retraces 50%, so 50% comes in at around 105, 61% comes in 112, my perception is that we're actually targeting 125, 123 area. Okay, which lines up with, I mean, over at this level, which is at 100 and around 100 level, there will be some significant resistance because of this previous support could turn into resistance. But in reality, this is the area we need to worry about, 125 area. So if we conclude now that the yen is going to be going, US dollar yen is going to be going up like this, and this current sharp rise is a part of a wave 3. And again, this one, if you look at it, it's done like a 1-2-1-2 pattern. Here it's done small 1 that happened within a day, small 2. So that's a first wave up, wave 2 down, and then we are on a wave 3. So within a wave 3 we've again done 1, 2, and we are in a third. So this is the third of third of third. So it's going to be continuing. This pair is not going to stop until we come to some significant points around about 100 or maybe 110 before we have any meaningful retracement lasting something like this one here. That pair is going to go. So I would not short this, really speaking. Look for continued opportunity to get long and get long to the upside. So this analysis indicates that the yen is going to be the weakest because it's going to be losing ground against the dollar, and we already examined that the dollar is going to be weak, relatively speaking, against the pound, euro, New Zealand, and Aussie and Canada. So now to sum up on a big trend analysis, we are beginning to build a picture that we have the weakest currency on the board is yen. We have the second weakest currency is going to be dollar, and then the third weakest currency is probably going to be Canadian dollar, because we noticed, if we look at the Canadian pair, we noticed that Canadian not only going to be losing ground against pound and euro and Swissy, but possibly also against the Aussie and Canada, because on Aussie and Canada, from the low we've risen up in what looks like to be a rising wedge. So I think that rising wedge in this case is the first wave up. It's called a leading diagonal. So that's the first wave up, wave A. All of this congestion is a part of wave B, and we'll be doing a wave C. So Aussie is going to be gaining against Canada. And then if you look at the New Zealand, it has a very same kind of a picture. Not much data, but it's the same kind of picture. So on big term analysis now, we have the weakest yen, then the dollar, and then the Canadian. And then after that will be Aussie and New Zealand. And a little bit unclear which of the two is going to be weaker at the moment, because the chart is not clear. But I suspect that the New Zealand is going to be weaker. And then in the stronger group, we have a euro, followed by Swissy, and then pound. So broadly speaking, that concludes my overview of how big term analysis I'm looking at. And the way I would use this is, now if I feel that the euro is going to be strongest, then I can play euro against either Aussie or New Zealand, or euro against yen. If you put euro against the yen, is probably the best one, because the strongest currency against the weakest currency is going to give you maximum speed. And then not getting complete what you call correlation between your other currencies that you're holding in a portfolio. So after you've done euro yen, you might, for example, do something like a Canadian against Aussie, going long on the Aussie, short against Canada, or maybe doing like a pound Canada. And another currency pair you might look at is probably then something like New Zealand against Canada, because New Zealand will be gaining against Canada. So have maybe 3 or 4 currencies like that, or shorting dollar with the Canadian pair. You see, so that way you would have less correlation amongst your holdings, relatively smoother ride. And in reality, whilst many of us try and look at daily chart, try and look at 4-hourly chart, and we look at trying to work out where this is going to go, and for example looking at a euro chart at the moment, is it finished, is it going to go higher, where is it going to stop? I think really you would make a lot of money, on riding this bigger trend, and very kind to your soul, kind to your to your blood pressure, and a lot more profitable. Um, Again, many of you in the past have seen one of my chart here on a euro. If I can just find that one. Where is it? I think it was here. If I drop these, we'll probably see it. See this chart here, like in September when I produced these other charts. In September, I also produced this US dollar, euro US dollar chart, and on a euro US dollar chart, I already had back in September. So in September, we were middle of September, so that was the time when in fact, even before this particular one, I did it in mid August, and I already put first target was 130, 130, you can read the 131, 132 area, next one 135, and we've gone through that, and the next one is 138. That's what I had back then. So if this big picture analysis help in this particular way, then you can see that really speaking, the best way of trading these is bigger term, and then you wouldn't particularly be interested in even what the news events are going to be during the day. I wouldn't really worry. They are insignificant, and what you want to then just keep an eye out is major structure like this one here. For example, this 135 was a significant structure, and apparently at that stage the euro hasn't really battered an eye at it, gone straight through. I think it's really going to continue. There is another trend line coming down, but I think even that trend line is not going to hold. I think euro is going to heading to the area I just pointed out, somewhere in the region of 149, 150. Euro is not going to stop. It's in a big uptrend. If you look at the RSI, that's the other thing I look at on a weekly chart. We've only had this occasion here, which was basically a bounce, and then this second bounce. Those were the only two occasions when we had RSI that high. We are now approaching that RSI from the low. Okay, if you look at it on a daily basis, then on a daily basis we've not had an RSI up like that. Again, if you look at historically, see, we've not had RSI that high. See this RSI here, that was at all-time high. So recently we've scored high RSI, even higher than this previous tops on the way down. So that suggests to me that off that move there is a massive energy built in where longer term is going to play out, and there are a lot of fundamentals in this. A lot of people were deserting euro, for example, on the way down here. There were many headlines in news about a major large institutional multinational companies moving away from euro. There were talks about euro breakdown, and people pulling out of their legal contracts or renegotiating them. So all of this was a part of a panic, and even companies like SmithKline Beecham's and AstraZeneca and companies like them, they were saying they were diversifying away from euro. So those kind of things was classic for major historical low, significant low, not a historical, significant low to be formed, and a new trend to rise. So on this new trend, you can imagine now many hedge funds are caught on the wrong side. Many companies will be trying to bring the money back to euro. So now the rise we've got now is not simply just political. The rise we've got now is actually money coming back to euro. That's a real driving force. And the second thing is that from the ECB's president last minutes, he was saying starting from this month, there are going to be many loans that the ECB have lent out to EU banks is going to be starting to be repaid quite significantly. So that means effectively the liquidity of euro being withdrawn, that ECB pumped in previously is now being withdrawn. So if that is being withdrawn, then chances are that there's a less euro to go around, and hence more reason for a euro to appreciate and actually accelerate. That's what I'm thinking is happening. We're seeing an acceleration of euro. So I don't know if that helps, and that, as I say, is conclusion of what I was going to show you how I analyze these currencies. In the intermediate periods, like days and weeks, you might find sometime that a euro, because the euro pound chart, you might find the euro is retracing euro pound chart. So then pound will be stronger for a shorter period. But taking this bigger picture view over next 6 months to 12 months, I think the analysis could be very profitable. You would not be looking to keep going against the trend. You'll identify trends that are clearly there, accept them, embrace them, and forget about everybody else talking negatively, because some of these people who talk, they've got their own ego. Maybe sometimes they're caught on the wrong side. Maybe they've got warped views, biased views, prejudices. So put them all away, and I think just look at that. And this same kind of a thing also holds true on, say, for example, gold. This is the gold chart. Let me just in the gold chart, big picture gold chart, you see there were people who were sometimes saying, oh, pitchfork and trend lines and this and the other. Well, this pitchfork I put in there, I admit I put it when this top was formed. I didn't apply it to the low here because I wasn't trading gold, and I still don't trade gold, but I put the pitchfork in there. Look, the low of the pitchfork is pivoted in the significant low back in August 2007, and then the higher pitchfork on the high of March 2008, and then the lower pitchfork on October 2008. And then that pitchfork provided a guide to price right up till recently. It actually picked up the major high, and currently I think we are going to, this second line I put in there is the same width of half a pitchfork, and it's also lining up with my moving average, which is a 200 period moving average. I think we are vulnerable to come down there. We will be looking at 1480, probably 1450 as a potential low before the gold goes up. And why is gold coming down if the euro is going up? My feeling is that many people who reckon that the gold is a reserve asset for rising inflation, I think that's a misconceived view. But even if you accept that, it looks like currently the inflation that everybody's talking about is not going to take place. We've got two-tier picture. We've got some commodity or some part of the economy will experience tremendous inflation, but as a major national level, we are not going to have that. On a national level, we're going to find that the inflation is not going to take place. But this analysis tells me that this top was a major wave 3. We are currently in a sidewave wave 4. So once it hits like 1500, 1480, or maybe even 1450, I think we will be looking for a significant low, and at that time the dollar will go in a real tailspin, and purely because of that, not because of anything else, purely because of that, not because of Goldberg or not because of all these other arguments you hear about gold and silver, purely because dollar will go in a terminal decline. When we see dollar gives up the recent low around about 72 area, which was the last significant low, once it gives that up, by then everybody will know where dollar is going, and then everybody will try and rush, and this gold could then pick up. But I don't think gold will go much beyond 2000, even if dollar is worth nothing, because my reasoning behind this is, okay, so if dollar is worth nothing and most of the other world currencies is worth nothing, they're not worth the paper they're printed on, and so gold can be a massive asset class to hold as a hedge against these falling currencies. But on day to day, you can't use gold. You go to supermarket and you got a gold bar, you can't use that to buy a packet of crisp or bread. So most people, if they are going to be in this economy suffering from the current malaise, they're not going to be able to have a lot of money to buy gold. And many people who hold gold, okay, they hold it, but who's going to buy it from them? Because whenever they come to sell, there must be somebody else who wants to buy it from them. So I think what's going to happen is major smart institutions, they are going to load up around 1450, 1480 or 1500 if it gets there, right? then they're going to ride it all the way, and they know exactly what's going to happen. Many people like you and I might then be caught in a gold fever again. We'll be buying it from them as it goes up, and when it gets to the top, the major institution will clean out, and they'll leave all the, not just retail public, but there'll be major hedge funds caught on the wrong side. Many organizations will be caught on the wrong side, and it's going to be really ugly. Once it gets there, dollar will have bottom, and the dollar will be in a major decade-long cycle. So against that, nothing will hold. Oil, gold, silver, nothing will hold. Silver is currently in exactly the same kind of a situation. For example, if you look at this on a weekly chart, we are coming into this 200 period moving average is around 27. But I think currently what we've got in silver is we've had a wave 3 high. All of this is part of wave 4, and we're going to go into wave 5. So wave 5 could actually get silver back to the previous high, and silver is a lot more volatile than gold. And if you look at playing this, and if you were really looking at capitalizing now on your big picture analysis, then this is the way I would use it. Let me just quickly explain. Is that the silver gold ratio is at a record low, or toward the record low, not record low, but is at the toward lower end. That means that if you were not to take a market direction, then what you could do is you can buy your position in silver and sell gold. Now normally most of us can't do that because we haven't got big enough account size. So what we would do in that case is that we would buy a cheap long-term options on silver, knowing that silver is going to be faster in appreciating against gold. So if gold, for example, goes up from the current level to 2000, you're only talking about 30% approximately. If you look at this one, if you look at the silver, is currently at 30, but if it drops to about 25 or 26 and then goes up to 50, that's like doubling. So on that basis, you can buy cheap options. So if silver ever falls to the area of 25 or 26, by that time nobody will believe that silver is going to go up. So at that stage, you can go and buy 1 year out option for very, very cheap. Put on something like a $400-500 or $1,000, and that's it. Forget it. Then if silver ever hits that, so the downside would be is that if it never gets there, you lose your stake money, whatever that $500 or $1,000. But if it ever gets there, I tell you, that will be a jackpot. That will be a trade of your life. It will probably worth, I don't know exactly, but a wild dream would be that it will probably worth like $20,000-30,000, maybe more. I'm telling you, this, once you get a picture analysis that I'm talking about, then I think you should not just trade currencies like most of us are currently trading. Many of us open up trading account because currency account doesn't take a lot of money, and also we believe, not necessarily true, but we believe that with a small money we can get high leverage, and we can start taking one lot, and we can start taking half a lot, and sometimes we make good $200-300, and at other time we give them back. But in reality, it's really mug's game. If you should do it on a big daily picture like I've been talking about, but if you were to take that particular argument further, then you could say to yourself that, okay, supposing, say for example, we have concluded that the stock market is going to go all-time high around toward the end of the year. So on the next setback, you would buy some stocks, or you would buy a option on the index that are cheap 12 months out. And even if you take a couple of months against you movement, you're never going to be stopped out. You'll never have to worry about adverse drawdown or margin call on your account, and you're giving yourself next 12 months. Don't take them for short. We are all this view is next 12 months. Next 12 months, silver will probably be high, gold will probably be its all-time high, stocks will have done like 16-17,000 on Dow Jones Industrial. So those big kind of pictures, you don't have to be very clever. Don't do a lot of analysis on individual stocks. Just go for big options on indexes, and you would do really well. Then when the top comes, if we think that we are now at the mega top, at a generational top that will last for years, decade long more, then you could be reversing position at that level. Now that would be my real strategy, and I would explain that and expand on that if there is interest on maybe future occasions. But you can see where you can get with this, and you don't need to get so involved individually on minor charts about Fib ratio this and divergence this and this kind of thing. So I hope that my zeal and my general, what I believe is logical, trading bigger picture, larger time frame, is probably more suitable for many of us. And we don't have to trade big sizes. We can trade small contracts. Even if you go in with like a 1 minute, soon in some of these larger 12-month trends, soon you could build up without exposing yourself on your risk side. You're adding to existing positions that are profitable and locked in with a guaranteed profit. Then you add another one, and you never expose yourself with much more than your normal account can hold. Like a 1 or 2% on any individual trade, and you never add another position against your guaranteed. You locked in. So the only thing that risk is your last position. So last position only represent 1%, but all your previous ones are profitable. So you would never have adverse drawdown. Even we get a market meltdown, you would never have an adverse drawdown. And that way you could actually be very profitable. 1 minute contract rising $3,000, 3,000 pips. That will be like $1 to a pip. That's $3,000. So if you got 2 or 3 of these kind of position over the next 12 months, you could really forget it. You can forget daily, whole day checking the screen. You can forget it. You could plan to say maybe, okay, I want about 12 to 13 or 15,000 salary for this coming 12 months. But you can do it by maybe just having 2 or 3 mini lots on maybe 4 or 5 different currency pairs. I don't think that many of us, I'm not saying for everybody, I think many of us don't even break even. Forget about resulting in 14,000-15,000 profit at the end of the year. So anyway, I've said enough. I don't know if there is any other questions. Curtis was asking me about silver. I briefly looked at silver without going into great details. I hope it's satisfactory. If you wanted a slightly more detail, I think we had this first drop down in this triangle. I think is a wave A. Then I think we've gone in a retracement, wave B, and we are now doing A, B, C down. So this wave C is not wave C, is actually a larger wave A in bracket. And then we've done wave X and another cycle down. So we're expecting this 24, 25 area to be retested before the bottom is in. Okay, any more? Any other questions? Anything you're not clear, or you want me to just clarify? Okay, excellent. Well, if that's the case, then it's been a pleasure. Thank you for joining me and spending a little over an hour with me. Hope it's been profitable. Hope if nothing else, you've gained the idea of maybe looking at very big picture and using big picture, using small position to become real profitable. And then our dream of many of us are looking for is possibly to get away and in the daytime do things and come back at the end of the day, or check the main chart over the next couple of 2 or 3 times in a week. I really think it's possible. I am very passionate and I think it's possible. But it's only possible in using this kind of logic. If you appreciate that, then as I say, you can maybe leverage this even further of exploring what option market will give you, because option market gives you the advantage that you can put in a very small amount of money, which if right in the next 12 months could multiply by 4, 5, 6, 10, 15, 20 times your initial capital. You'll never have an adverse drawdown. You'll never lose any more money than the money you put on the table. So if you put $200 or $300 on the table, that's the maximum you'll lose. If you get it right, it could be multiplied 7, 8, 10 times, 14 times, 15 times. I've seen cases like that. And you don't want all of them to multiply like that. If some of them will double or triple, in maybe 5, 6 months, but some of them will really work out and will give you, real lottery ticket winning. Then you might actually get a taste for trading something different using different instruments. And I would be very helpful in helping any of you with some structure in place to try and explore how you do some of this trading on options. Not necessarily pay thousands and thousands of dollars to go on a courses. I spent $2,000 for a weekend course and going for an option, even though I was familiar with what options are. Never traded them, but these are fantastic opportunities, and I hope maybe in future we could explore some of these. And if you're ever interested in maybe pursuing this and maybe putting a plan together, for yourself, for your own individual, I'll be willing to help you with some of that. Some element could be free if it's only going to take me a few minutes, but longer term, maybe we could be looking at maybe putting up a small group together, and some of these small group we could look at like a self-help group. Obviously there will be some cost element to it, so I'm not marketing this, and I don't have something in place, but I think that I can really help a lot of our friends and colleagues to make a lot of money without actually being whiz kids, without understanding every ins and out. It's like driving a car. You need to know basics, but you need to know basics really well. How to control a car, how to maneuver the car, and where to stop, and and drive safely. Generally, these kind of things, and just so that you know where to fill the fuel, and where to top up the radiator water, things like that. So you need to know the basic, but you don't need to know a detailed knowledge about every functioning of these things, which many people get bogged down in, and yet you can use that for really hitting big. And especially if you get somebody to guide you along with you, so you're not doing this by yourself, but rather you've got somebody holding your hand and actually trading the same trades with you. And I think I have that passion, I have that willingness to share with people what I know. And as I say, for me, this is like a life-changing course, because up until now I have worked as a professional, a financial advisor, and I'm not pulling any cotton wool over your eyes. You can go into financial services website, type in my full name, Danji Varasani. It's shortened for Danvi, but really it stands for Danji Varasani. And I don't hide my name. I use my same name everywhere, Danji Varasani. So my emails are danjivarasani@hotmail.com. Danji Varasani is my Skype name as well. But you can type in my name and you will see that I was registered with them until 2008. And I've had no complaints at all from any customers or any clients of ours during my entire working life with them. But now I'm at a stage where at 56, the market is changing so fast, and I think to myself that this is a passion. If I don't grasp it now, one, I will lose the opportunity which I lost in 2007, because I was really busy with my parents at that time. I couldn't capitalize on it. But I see what's coming. I can see next 12 months, and I think there's a lot of opportunity for us to really become fairly well, if not necessarily very wealthy, fairly well, and utilize whatever resources we've got to multiply this in the next 12 months. And then we will reverse ship. At that time we will reverse course and do the same again for the next 12 months. So if my things work out between now and the next 2 to 3 years, I think I would be more than happy, and I would never look back. So that's why I've given it my all. At the moment, just personally sharing my information with you is that since 2008 I stopped working. So my wife worked. She's a specialist nurse working for local hospital, local health authority in London. She's a cardiac nurse, and so we depend on her for our livelihood since the 2008. And then all the savings we've practically spent all that away whilst I've been looking after my parents. So now we've got a relatively meager pot left from which I intend to build life-changing capital. I want to be in a position where like everybody, by the time you retire at 60, you've got reasonable capital base from which to draw upon. But my feeling is that if I can provide a reasonable buffer between the now and the next 3 years, then God willing, my health remains, I will not be stopping trading. I will still be utilizing the same thing. So I will become self-dependent, and I would really love to and jubilate with an opportunity to maybe help some of our friends to achieve the same object. And we will be happy to meet, shake hands, sit together, have a meal, have a drink. I don't drink alcohol, so we'll have to drink a cup of tea or something different. but I would really love to. It would thrill me to bits. Not that I've succeeded, but I've taken a small group of individuals with me, you know, who would also share my joy and exhilaration along the way. So I would really love that opportunity. So let me conclude here. I will stop the recording, but if any of you are hanging around and you wish to maybe ask any of the questions, you're welcome to stay, or we can arrange another occasion